Alright everyone, Cowboy Trades here, welcome back to the channel for another update on Kadena. So, once again, Kadena has just broken down into new bear market lows, just like we predicted in our previous video 8 days ago. However, while Kadena USD breaks down into new bear market lows and the Kadena total value locked on chain starts to bleed out to the downside, the market psychology has things backwards, and a lot of people right now are more bearish on Kadena than they actually should be. We're going to talk about that in today's video. We're going to be talking about the market psychology, a little bit of a deviation from what we normally talk about. Of course, we're going to start off with the technical analysis. So let's dive right into this, starting off on the daily time frame. In our previous two videos, we identified a plethora of bearish divergences which were forming and started to really take place in this gamma zone around about 69 to 70 cent. Over here on the chart, you can see these blue lines identify these hidden bearish divergences which we had, and this purple line here identifies a regular bearish divergence. These both came into contact around about 70 cent, and since we had both of these divergences form, we have dropped about 30%. Now, if we are looking at the general structure of these two divergences, in my opinion, I think we have now fully completed these. If we're looking at this one, we're no longer making higher highs on this spectrum. If we're looking at the hidden bearish divergence right here, we're making lower highs, but the oscillator still isn't making higher highs. So in my opinion, these two divergences which we identified in our previous videos, I now believe these are fully complete and they are done. However, we have come down and reset the MFI. We came all the way back down to 20, and since then, the MFI has been making highs, higher highs, and despite the fact that we've been breaking down for the past 48 hours, the MFI is pushing up once again. So here's what I think is happening. I'm going to let you know very quickly what my prediction is on the daily time frame and how we're going to form this divergence, and then I'm going to back it up by some fractals which we have been witnessing over on the weekly time frame, specifically this one over here. So here's my prediction, and it will make more sense in a second. I don't quite think we're ready to plunge into new bear market lows. Of course, we're at new bear market lows right now. I think we're going to spend a little bit more time around this 50 cent region. This will become more apparent later. I think we're going to spend a little bit more time forming this hidden bearish divergence before we get ready to plunge into new bear market lows. The oscillators are pretty reset at this moment in time, so I think we're going to spend, like I said, maybe a week or so just forming and making this divergence stronger and stronger before we break down to the downside. And here is why. If we come over to the weekly time frame, at this moment in time, you can see that we have just put in a weekly death cross over on the stochastic RSI. Now, if history is any indication, like we talked about in our previous video, we're probably due for a whole world of pain. Now, I'm being conservative at this moment in time. I believe we've got about a 70-day correction ahead of us, and I believe we're going to bleed down to about 30 cent, which is a 40% correction from where we are right now. Over on the stochastic RSI in our last video, we identified how after major rallies and dead cat bounces take place in Kadena, you always witness these bearish crosses over on the stochastic RSI, and these have respectively yielded 77-day drops, 70-day drops, 105-day drops, 133-day drops into new bear market lows every single time, 100% accuracy, and it has never failed. And these drops have also, once again, respectively yielded 85% corrections, 79% corrections, 61% corrections, 71% corrections. So when I'm predicting a 70-day correction at a 40% drop, this is really the most conservative case in my opinion, and I'll talk about why I don't think this one will be as brutal in just one moment, but that's basically what I'm predicting. Now, here is why I don't think we're quite ready to plunge into new bear market lows, although I still do believe we're of course coming for these bear market lows. If we come over to the weekly time frame and look at this bear market fractal, which I've previously highlighted on the channel, what you can see is Kadena has a long running history of making bear market lows, having a bounce, and then dipping its toes underneath the bear market lows before retesting them and then nuking. Over here you can see bear market lows, we dipped our toes beneath them, we retested the lows, and then we nuked. Dipped our toes below, retested, nuke. Dipped our toes below, took 2 or 3 weeks, but we retested it and then nuked. This is kind of why I think over on the daily time frame now, this will make a little bit more sense. I think we're going to be grinding against this divergence chart. This hidden bearish divergence, while it is definitely a nasty one, this has only been playing out for about 2 weeks or so. So I definitely think there is the likelihood of lollygagging round the 52 to 45 cent region, just kind of ping-ponging between these levels before we're really ready for that next major meltdown. I think we've got a little bit more room for the MFI to push back up to the upside while the price continues continues to make lower highs and lower lows. Don't get it twisted. I don't think we're going to rally up to the upside in any significant way. I'm talking about lower lows and lower highs until we really get ready for that melting red brutal candle to the downside like we've seen in previous instances where we've made new bear market lows. Now, have my price targets changed? Has anything really changed in the macro timeframes, guys? No. If you have been watching my content, you know we've been sitting on the sidelines for Kadena for absolutely ages now, and there is a very, very good reason in which I think that we're only going to see a 40% correction this time. That being that throughout the entire bear market, when we've come down to these volume profiles, we've been bouncing on rather insignificant levels of volume in terms of the volume profiles. However, at this moment in time, we are about to lose one of the most significant volume profiles at 50 cent, and we are going to come down to this massive POC point of control cluster. There is tons of liquidity down here. There's tons of trapped liquidity between 32 cent down to the point of control at 22 cent. So yeah, in the micro, I think we spend a little bit more time round about this 50 cent cluster before in the macro, we really decide to flip this previous bear market low at 50 cent as resistance and come back down to the downside. This could look something like this on the weekly time frame, where for this week, we kind of dip our toes into new lows. We could go a little bit lower, like I said, 45 cents, something like this, bounce back up to around about 50, and then in the week following that, we really start to see those mega red candles back down to the downside. So what's the next price target? Well, really guys, in the lower time frames, I'm not seeing any important technical analysis patterns which are giving me any signal that there's going to be any significant place to bounce between 50 cent and 30 cent. That's another one of the reasons why I think we're just going to spend a little bit more time lollygagging in the lower time frames before we get ready for that next macro move back down. And as you can see, you can always look at the chart and see these massive bearish engulfing candles on Kadena, and these typically always happen as you break down into new bear market lows after about a week or so. But despite the fact that I'm bearish in the lower time frames, despite the fact that we're forming another hidden bearish divergence, we're breaking down into new bear market lows, and there seems to be no support down to about 32 cent. While I am predicting for 32 cent, the markets right now have the whole market psychology of Kadena and most of the cryptocurrency altcoins absolutely backwards, and that's what I want to talk about from a market psychology perspective. I've been in the cryptocurrency markets for a couple of cycles now. I was back here in 2017 and I saw the exact market psychology play out. Before being in the cryptocurrency markets, I was a stock market trader. I traded precious metals, I traded oil, I traded US 30, I traded Forex pairs. And this market psychology is something that I only see in the cryptocurrency markets. You don't see it in the stock market. If you go in the stock market and you look at the majority of people which are value investors, investing in their favorite companies, maybe it's Apple, maybe it's Microsoft, maybe it's Nvidia, when you see corrections in stocks, stock market traders say, hey, let's look at the fundamentals. Have the fundamentals changed whatsoever? No, the fundamentals haven't changed, but I can get a cheaper price. Okay, let me buy in for cheaper. And because I'm a value investor, I believe that the value of this stock is actually higher than I'm purchasing it for. So, as the price goes down, I'm happy to buy. However, in the cryptocurrency markets, it is the complete opposite way round. I've been covering Kadena since round about $7. To be honest, I never even heard of it back when it was up at $30. As soon as I heard about it round about $7, this is when I started to cover it. And when I started making videos bearish at $7, people told me when we broke down at $6, I was going to cry if I did not DCA. At $5, when we broke down further, they said, buy now or cry later. At $1.50, when we bottomed out round about here, people said DCA now or cry later. When we came down to $1, people said, DCA now or miss the boat. When we broke down to, 80 cent, people said buy now or cry later. When we broke down to 52 cent, people said, why are you still waiting for another breakdown? 50 cent was the bottom, buy now or regret it later. But now the market psychology is starting to change, and I noticed the exact same thing happen in 2017. And when the market psychology starts to change, when people start to give up, this is typically when the bottom is very, very close. The problem with the cryptocurrency markets is it defies all logic, and this isn't what you see in the stock market. In the stock market, if we were looking at Apple stock right now and it rallied all the way up to the upside, most investors, most value investors would say, hey, the fair value is probably somewhere around about here. So I'll sell here, I'm happy to buy here, buy here, buy here, buy here, buy here, buy here, buy here. And they're really, really happy to buy at these cheaper levels. However, in the cryptocurrency markets, it's more like, oh, this project just made a new all-time high, let me buy again. Oh, this project just went on another rally, let me buy again. Oh, this project just hit $30, let me buy again. And then, you know, as we come down, they get less and less excited after every dip, and I'm no longer seeing the majority of my messages saying, you know, buy now or regret it later. What I'm actually starting to see, and by the way, I'm a small channel, I've got less than 11,000 subscribers, I've got a small Discord, I've got a small Twitter. I'm still small enough that I recognize if someone comments on my videos, if someone sends me a message on Discord, Twitter, I'm still small enough that I remember profile pictures and I remember what people have previously said. If you send enough messages, I'll begin to remember you on my channel. And I've actually started to see some people who have been sending messages like, you should DCA now, you should DCA now, you should DCA now, you should DCA now, you should DCA now. These same people are saying, why are you so bullish on Kadena now? Why do you think Kadena could do a 50x or 100x from the lows? Why is Kadena going to survive? I don't think anyone's building on Kadena. I don't like Kadena anymore. I like Kadena up at $30. I liked it at $10. I liked it at $7. I don't think it's going to survive down here at 30 cents. Now, this is a phenomenon that just doesn't really happen in the stock market. In the stock market, if the fundamentals haven't changed but the price comes down to the downside, value investors are happy to pick up these assets. However, in the cryptocurrency markets, it's like euphoria, 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 euphoria. You start to get scared, you start to come into depression, and then during that final dip, it's like, okay, I give up on Kadena. There's a shiny new meme coin out there which has just printed a 1000x candle to the upside. So instead of buying a good project at a fair value level, I'm gonna ape into this new altcoin which has already done a 10,000x. This is not how you navigate the markets, guys. I know this isn't normally what I talk about on my channel. I know I don't really normally talk about the market psychology, but I just wanted to share with you my thoughts because, like I said, I've traded many different markets before: bonds, options, forex, oil, precious metals, commodities, everything. I've traded pretty much everything. And this is a phenomenon that I only see in the cryptocurrency markets. So yes, while I'm bearish on Kadena, while I'm bearish in the lower time frames, the next few weeks, maybe even the next few months, while I believe Kadena comes down to 30 cents, and by the way, I don't necessarily think this is the bottom. I think we could come down to 22 cents. We'll take it price target by price target. What I do want to highlight is if you were bullish up at $30, $10, $7, $5, the fundamentals haven't changed for you to be bearish down at these cheaper price targets. A lot of people have things backwards. They want to DCA every single dip until they dip too far, they run out of money, and then they're like, okay, I've got a sour taste in my mouth. Kadena's a scam. I don't like this project anymore. I'm going to ape into something new. And what will happen is, you know, their DCAs will be down 90% due to their strategy. They'll put what little money they have left, they'll convert it into a new altcoin, which has already done a 10,000x pump. They'll get burned on that altcoin, and then at some point in the future, Kadena, a project with good fundamentals, could potentially do a 50x, 100x, and they will be kicking themselves when they missed the boat because they weren't patient and they didn't invest at a fair value. I've been talking about this for ages. People laughed at me when I said the fair value for Kadena is down here at 30 cents. Now people are starting to say the fair value of Kadena is 0. Kadena will never recover. This is completely backwards, guys. So once again, learn market psychology. If this is your first cycle, I understand it can be a little bit hard to deal with emotions in these cycles. This is textbook though. You've got to approach the markets with absolutely zero emotion if you want to conquer them. So for today, my friends, that's pretty much all I've got. Once again, Kadena total value on chain is breaking down into new bear market lows. Kadena BTC is breaking down into new bear market lows, just like we've been predicting. I still think KDA BTC has about another 40% drop to go to the downside. That is a little bit worrying as well, because while I do believe that Kadena USD could drop about 40% down to the 30 cent cluster, if Bitcoin starts breaking down 5% or 10%, then that could of course mean that we're actually due for a 45 or a 50% drop to the downside, which is why I don't want to discount the fact that we could potentially be lining up for a 55% drop to 22 cents. So yeah, in the immediate short term, things aren't looking too hot for Kadena with these bearish divergences taking place, bearish engulfing candles coming down into new bear market lows. I would just like to highlight at this moment in time, I am not trading the market. As I have been saying over on YouTube, we do only enter trades on Kadena from utmost positions of strength. We previously shorted from this reversion to the mean up at $1.12. We previously shorted up at this reversion to the mean round about $1.35. At this moment in time, we're coming down into new bear market lows. Now, I will potentially put a video out with a potential trade if I do see it coming. Like I said, in terms of these fractals, I do seem to notice we ping pong down to new lows, we come back up and retest the previous bear market lows before coming back down. So I'll keep you informed. At this moment in time, I don't see any trades. If we do break down a little bit further and find ourselves coming back up to this 50-cent region, I could potentially put a trade video out. We'll have to play it by eye. I'll let you know how things are going. In the higher time frame, guys, like I have been saying, I am going to be bullish on Kadena when we do come down to these lower price targets. In the immediate short term, though, things are not looking too hot. If we're looking at the price action, one final thing that I would like to reiterate, which I talked about in my previous video, is the fact that the price is only down 49% year to date. Although if we're looking at the total value locked on chain, this is down 65% year to date. And if we go over to the Kadena Block Explorer and we look at the inflation rate, you can see right now we've got 242 million circulating supply of KDAs. So let's calculate the inflation change that we've seen in the past year. We've got our finishing value, that's 242 million. The starting value is 213 million. So 213 million. We need to minus 213 million here, times this by 100 to get the percent. And if we click this, you can see the inflation rate on the yearly time frame is about 13.6%. So my point is, in the past year, we've seen a 65% drop in the total value locked on chain. We've seen a 13% increase in inflation, but the price is only down 48%. Just another metric in which I'm looking at that personally makes me believe that we do have a little bit more room to move to the downside before we will find a bottom. So for today, my friends, that's all I've got. As always, if you do enjoy the content, you know all that YouTube stuff, you know what to do. Make sure to leave a like, a comment, share the videos with your friends, turn notifications on so you don't miss any future updates. Follow me over on Twitter at 618_cowboy for some extra posts, charts, memes, polls, etc., which you won't find over on YouTube. I'll see you in the next one, my friends. Hopefully we have a retest in this chart at some point soon and we have a new trading opportunity presenting itself. Until then, I'll see you at 30 cents. Been your boy Cowboy Trades. I'm out. Peace.